The stock market is currently closed for the Christmas holiday, but the most recent trading session on Wednesday, December 24, 2025, ended with a move that has left many investors scratching their heads. SOBR Safe Inc., trading under the ticker SOBR on the Nasdaq, closed at $2.37 marking a massive increase of 1.07 USD or 82.31% in a single day. On a day when most of the market was winding down for the holidays, this micro-cap company saw an explosion in volume and price that typically only happens when there's a major fundamental shift or a significant short squeeze. You might expect that a company announcing a $2 million private placement would see its share price drop because of dilution concerns, especially when that placement is priced at 1.55 USD per share, well below where the stock ended the day. Yet the reality is that SOBR did the exact opposite. It soared. This creates a fascinating tension between what theory tells us should happen and what the actual tape shows us. Most investors looking at a stock like this through their Robinhood stock app or Fidelity mobile app might assume that a 1.55 USD offering price would act as a ceiling. Logic suggests that if a company is willing to sell millions of shares at that price, the market shouldn't be paying 2.37 USD for them. However, the curiosity loop here is that the market often views these capital injections not as dilution, but as a lifeline that ensures the company can keep the lights on for another few quarters. For a company like SOBR Safe, which has been struggling with a going concern warning in its filings, $2 million is significant. It changes the narrative from a company that might run out of cash to one that has just secured enough breathing room to potentially fulfill its recent contracts. The general belief among casual observers of the stock market is that penny stocks are just gambles. People often compare buying SOBR to buying out-of-the-money options on Tesla stock or Nvidia stock, hoping for a lottery ticket win. But if we look closer, the recent movement in SOBR is tied to more than just retail hype on the Robinhood stock trading platform. The volume during the December 24th session was astronomical compared to its 10-day average. When you see over 140 million shares trade hands on a company with a market cap that was barely $2 million just a week ago, you are looking at a total turnover of the float multiple times over. This suggests that institutional algorithms and high-frequency traders using the Interactive Brokers platform were likely fighting for position, fueled by the news of the private placement and the associated warrants. Let's break down why that 2.37 USD closing price is so controversial. The company is issuing over 1.2 million shares along with Series C and Series D warrants. These warrants have an exercise price of 1.30 USD. This means there's a massive amount of potential selling pressure waiting in the wings. If you are practicing self-investing or using investing sites to find your next move, you have to realize that the people buying in this private placement are already in the green by nearly $1 per share. Usually that leads to an immediate sell-off as those investors lock in profits. The fact that the stock held its gains into the close suggests a very strong buy-the-dip mentality or a coordinated effort to squeeze short sellers who thought this was an easy fade. When you look at the landscape of online investing today, the tools available through the SoFi trading platform or the Fidelity trading platform allow retail traders to react to SEC filings in milliseconds. The filing for this private placement hit the wires and immediately triggered a surge. This is where expectation meets reality. The expectation was a move down to the 1.55 USD offering price. The reality was a parabolic move that broke through every resistance level on the chart. This kind of volatility is why many people prefer the safety of a Schwab Intelligent Portfolios account or an intelligent portfolio that sticks to Fidelity ETFs and Fidelity mutual funds. Investing in a company like SOBR is a completely different animal than putting funds into Apple stock or high-cap individual brokerage accounts. The recent stock movement has been a wild ride. Only a few months ago, SOBR was forced to execute a 1-for-10 reverse stock split to stay compliant with Nasdaq listing rules. This followed a previous 1-for-110 split. When you see a company doing multiple reverse splits in a short window, it is usually a sign of extreme distress. It tells you that the market has been devaluing the company faster than they can grow. But in the last 30 days, something shifted. The volume began to creep up. The company reported that its revenue for the third quarter of 2025 rose significantly, reaching about $109,000. Now, that might sound like a tiny amount of money for a public company, but it was a triple-digit percentage increase year over year. The core of the analysis here has to focus on what this company actually does, because that's what's driving the speculative interest on platforms like Robinhood Crypto or SoFi Active Investing. SOBR Safe produces non-invasive alcohol detection technology. Instead of a breathalyzer, they use a touch-based sensor that detects ethanol through the skin. They have two main products: SOBRcheck, which is a stationary device for warehouses or fleet hubs, and SOBRsure, which is a wearable band. They are targeting the logistics and construction industries where safety is a massive liability issue. If they can prove that their sensor is as accurate as a breathalyzer without the hygiene issues and the time-consuming nature of traditional testing, the addressable market is huge. However, the financials are the reality that must be balanced against the expectation of a technology takeover. Even with the revenue growth, the company lost about $2.2 million in the third quarter alone. They are spending much more on general and administrative costs than they are bringing in from sales. This is why the $2 million private placement was necessary. Without it, the company was essentially out of cash. For those of you watching this closely, please comment below and let me know, do you think a company with less than $500,000 in quarterly revenue deserves a multi-million-dollar valuation, or is this just another case of a low-float stock being manipulated by social media hype? Institutional activity in SOBR has been almost non-existent until very recently. Most of the shares are held by insiders and retail investors using the Robinhood app or SoFi Invest. When institutional ownership is low, the stock is prone to these massive 80% swings because there aren't enough steady hands to provide liquidity. If you are looking for investment help, most advisors at Fidelity Wealth Management would tell you to stay far away from something this volatile. But for the self-investing crowd, the lure of an 82% gain in one day is hard to ignore. They see it as a way to grow a small individual brokerage account into something significant, even though the risk of the stock returning to 1.30 USD is very real. The macroeconomic pressures of 2025 haven't been kind to small-cap tech. With interest rates remaining higher for longer, companies that aren't yet profitable are struggling to find cheap capital. This makes the recent private placement even more critical. H.C. Wainwright, which acted as the placement agent, is known for handling these kinds of deals for micro-cap companies. Often, these deals come with toxic features, but in this case, the pricing at 1.55 USD was actually somewhat close to the market price at the time of the announcement. This might be why the market didn't panic. It felt like a fair deal for a company in need of a boost. Let's look at the business model. They aren't just selling hardware, they are selling a software subscription. This is the SaaS model that investors love in stocks like Nvidia or some of the big names you'd find in Fidelity IRAs. If a construction company buys 100 SOBRsure bands, they have to pay a monthly fee to access the cloud-based reporting data. That recurring revenue is what could eventually make this company profitable. The gross margin on their software is high, but the hardware margins have been under pressure due to strategic price reductions aimed at getting the devices into more hands. In the final section of this outlook, we have to consider the possible scenarios for 2026. On one hand, you have the expectation scenario, where SOBR Safe signs a massive contract with a major airline or a global trucking fleet. If that happens, the current 2.37 USD price will look like a steal. The technology has been validated by third parties, and they have secured patents in Europe and the United States. They have the intellectual property to defend their niche. On the other hand, the reality scenario is that they continue to burn $2 million a quarter and have to keep coming back to the market for more dilutive raises. If they can't scale their sales team effectively, the $2 million they just raised might only last them through the spring. The catalysts to watch for are new partnership announcements. Any news involving a large-scale deployment will likely cause another squeeze. However, keep an eye on the Series C and D warrants. As soon as those become exercisable and the underlying shares are registered, we could see a lot of sell-the-news activity. Traders using interactive brokers or the Robinhood trading platform need to be aware of the float dynamics here. With only a few million shares available for trading, it doesn't take much buying pressure to move the needle, but it also doesn't take much selling to send it crashing back down. Comparing SOBR to other online investment opportunities like Apple stock or Fidelity ETFs is like comparing